Welcome to the Forex, and here we're looking at the US dollar index, and you can see that, well, we're waiting for it to develop some support on 80.20 and 80.30, and that's been accomplished. And as soon as it does that, support on 80.30, we can set the target at 80.50. Now it's moved through that 80.50 there. I just want to come back a little bit. First of all, we've got a nice support on the 80 here, major trading level, and we've also got this this pattern through here, which is very complicated, but it's sideways and it's an accumulation pattern. And normally you would take the distance of a pattern sideways here and pretty much stand it on its head up here. So it does appear that the accumulation will equal the distribution, which will be up further up here at 81 up here. So look, as long as this market stays well above 80, of course, but also pretty much this low through here. So if it stays above group 1 here, then we've got a positive market to the upside. And of course, that would leave the euro to the downside. So in looking at it from the downside, and we pointed out this the other day, from this particular high up through here, we've got 5 waves moving down for wave 1, in 1, 2, 3, 4, and 5 here. And if we got support on the 138 here, well, then we would have gone long from that point, but we never really got the support. We didn't get, yes, it traded above, but we didn't get the tested support with a reference point, and then the reference point is a trigger to trade long. So we didn't get that, and most markets have spiked because of the, well, there was all sorts of news last night coming out of the ECB and the non-farm payrolls and so forth, but so there's a few spikes around. But looking at this particular spike down through here, we have made a low down through here, and this is an impulse wave down through here. So it's just natural to expect to bounce off the 137 and then probably work lower from that point there. So just looking at that particular little spike there, which was in 3 waves here on the 5-minute chart, and then we can see that we've got 1 and 2 and 3 and 4 and 5 down here. So normally once you've got 5 waves there, we could look at the retracement level, so to speak, from these 2 here. So 38 to the 50 area here, where the supply, second level of supply, would come in through here. So look, if you can work out the corrective bounce from here, which would probably be, that's in 3 waves to here, so we could call that the A wave, the B wave, and the C wave would be pulling back up into this area here. Now this particular level here, the 137.20, is important, and you can use that as a pivot within group 1, number 2, but also being 72, it carries a little bit more weight as such. So it would be good if this market made a move above this level here, and then when you see it come back down and get locked under here, then you can look to get your short positions from there. And of course, shorting above the closest largest number, the 137, is always not a good thing. So you want to put small positions under here, and then smaller, larger positions under the 137 if that's going to be the case. Because yeah, so see if you get that, if that setup comes. But support on the top of group 1, which is the 30 here, does give it a positive bias as well. But that said, we know that the bigger picture is possibly corrective and further down, so you just need to be a bit more selective. But the midpoint is the important one here, the 50. It's the halfway between the 138 and 137, so that's like a real balance line, and you can see that here as well. So if that ever became the support for some particular reason, then you'd need to be looking for long trades at that point there. So what we're looking for here essentially is a rally back up somewhere into here. But when and if this becomes a resistance in here, then gleaning a small position there and looking to add under the 137 as a retest failure from here, from the reference point. And the Australian dollar, from the 93 here. We've been working our way through this corrective process through here. It's just not finished, that's all. There's more to come. It's a little bit difficult to interpret, but not going to miss anything. It's not going anywhere. That this bounce off the 92 area here, it also appears corrective as well. So that move up through here, which we can look at in a minute, is actually corrective. So even if we do get a move back up here for the B wave, we should still see further downside there. And this is just on the 5-minute chart, and the bounce off the 92 thereabouts. You can clearly see that it's got, well, it's got 3 waves here. There's 5 waves in here, a little bit tricky to understand, but the 1, 2, third wave here, and the third wave's got 5 waves in there, and the 4th and the 5th here, and you can see this has got rough 5 waves in it as well. So we've got an A, B, C here for the A wave. This is in 3 waves here. So we've got moving down, consolidation down. So basically an A and a B and and a C wave. So whatever comes up here, you have to understand that it's corrective, because this first leg here is corrective to this point. So just be mindful of that. Essentially, the market is on the daily, it's still overbought and showing bearish signals, and we're in corrective mode, and at the moment we're in a corrective rally. So look to short weakness. And also when you're shorting, obviously we're above 92 here, but the pivot within group 1 is always good for a short if it's a retested resistance. We'll have a quick look at the Australian yen as well. This is deeply overbought now, so yes, it could move, a little bit higher and so forth, but look to short any weakness in this area through here. We can see that the trend is really creeping in through here, so there's weakness here. It's just, it's just very much overbought, so just need to be careful on that here. I don't have it labeled, but you can see here that it was quite strong through here, but now you can see that it's slowing down and creeping. So selling new lows here would be the way forward here. The Australian Swissy that we've been talking about, we noted that we had an A and a B and a C here, 3 waves, so we were looking for this to move up above the 82, and it's done that. You can see that it's moved up, but it's got the first high above this level here so far, but it hasn't retested it, so that would be the next step. Yes, it could move a little bit higher before it retests. If it gets support on 82.30, a nice support up on that, then it would continue to go higher from that point, and we expect it to go higher and take that high out here, because this is an A and a B and a C here. It just may correct here first before it retests here, before it moves up any further there. The Euro Australian, just in the bigger picture here on the 1 hour, we were shorting it down to the 148, and then we were looking for a retest of the 150 there in 3 waves. And we've got 3 waves. We've got the A, the B, and the C, as you know. And yesterday we were talking about this being wave 1 down through to here and moving down lower. It's been a bit of a rough night with a lot of announcements and spikes there, as you can see. But look, basically in a nutshell, we want to be short under the 1449, and it's trading under that at the moment, and so it's still sort of all on track. But I also just got to point out too as well is that wave force can get a bit complicated, because this is what all of this is here. It's just a wave 4, and a simple wave 4 would be an A and a B and a C, but it can just get larger, and we just need to be mindful. And what I mean by that is that all of this here can just be the A wave. This could be the B wave in 3 waves, and then we can get a C wave back up here a little bit before we go further down. So yeah, just a little bit tricky. So well, can we just go in here, intraday? Well, that's first of all, that's the bigger picture here. We could, bring the wave 4 here, as I mentioned, in on this A, B, and C here, but it just may get a little bit bigger. I'm not quite sure about that, but just trying to find. Bear with me a second. Just trying to find some. Here we go. This will do the trick. we can see that the group 2 area here, the 65, 72 and 80 will play a part here. This move down through here is looking for, will be in 5 waves, a bit like the euro, and we'll be looking for a corrective bounce here, which is occurring now. So the A wave, a B wave, and a C wave here. So if it goes above the orange line here, the 72, and then comes back down and it finds it as resistance, then you'll know that you can short it from that point there. So you need to allow this to retest the, the sellers, the supplies coming in through here. The euro yen, this particular move up through here with the old highs here is also overbought as well. It's so there's more corrective activity to come here on that. We'll drill into that in a moment. But also too, I want to point out that 143 is the top of Group 1. So if we do find support on there, well, then we'll be going higher from that point. But it is overbought at the moment, and and it hasn't got that support on the 143. That said, we were looking to trade up to the 143 and then exiting and then waiting for support to come in. But we wouldn't have gone for the long trade just yet until we've got either support on 143.30 or we've got a nice corrective pattern. And this is a nice little corrective pattern here in 3 waves. The C wave is a bit sharp. Normally the C wave is more lazy. It's normally the A wave that's sharp. So that does ring alarm bells for me in terms of sentiment and personality of the wave structure. But look, we do have 3 waves here, okay? Now, so we'd normally go long on 143 support, but I think we could move in a little bit earlier if that's going to be the case. Let's see if we can drill in here. Just bear with me a little bit. So it's just on a 5-minute chart. So we're looking at the A and the B, and this is the C wave down through here. We can see this is in 5 waves, 1, 2, 3, 4, 5. So that's a nice C wave situation. So the midpoint is important. Yes, you could go long off that, but I think that it would be nice if we just waited for the 72 here. If that 72 became the retested support, then you could use that to go long on, but don't overtrade. That's the 143 there. You can add on the 142, so 142.80 rather. So those 2 guys there as support would be a little bit of a leg up through there. You could do it from here, and probably reasonably quite safe, I guess. It's because we got 3 waves here, we should make a new high above here. So it's plausible. So taking these new highs out here would be the go, keeping a tight stop. But the thing that sort of bothers me about this is that this has moved down really quite quickly through here. So it may just come back to here is an A and a B and a C here and fail. This is the block of supply here, the resistance in this area through here. So it can fail from here. So looking for support on that 72 would be a bit of a safer bet. The pound yen, a bit like all the other markets as well, it's correcting as well, and we expected that, and we were expecting it to come back to the 172. It's come close to that, and this little correction here doesn't really correct this whole trend up through here, does it? So we need to be sort of mindful of that and expect a larger correction to come into play here. So once again, the market is very overbought up at this area here. The momentum is still to the upside, but we expect more corrective pattern within this space here. Just counting the wave down. This looks like the high here, and if that's the high here, then we've got this as a as a corrective wave to here, and then we've got 1, 2, 3, 4, and 5 A, B, C. So look, we're heading up here as such, but we expect that too with that B wave that we were looking at. But once again, I guess if you got support on 172.72 here, then go long from that point. But otherwise, expect this just to be a rally up here. Alrighty, that's it. So not a lot going on, but that US dollar pushing higher. Keep an eye on that, and that would be the catalyst for other moves in other places. Cheers.